on.
Hi, everyone. Meg's just letting people in, so I'll just pause a moment or wait for everybody to join the webinar. And then as people are bobbing in, good to see you there. And is that everyone in, Meg? My trusty producer / director is there. So I'll get going. So I think everyone's in. So hello, everybody. I'm John. We met at the National Entrepreneurs Convention last week. It is great to see you again, if not kind of welcome. I know that not everyone here was at the National Entrepreneurs Convention in Birmingham last week. Not everyone here is an Entrepreneur Circle member. So I'll make sure today is kind of practical, plain English. Try and avoid accountancy jargon. Try and avoid too much Entrepreneur Circle jargon. But I am aware that quite a lot of people were there last week, and therefore I will kind of use a few examples that were shared. So why are we here? Well, over the last year, I've spoken to kind of dozens of entrepreneurs and business owners, including, some of the kind of very successful kind of 7-figure turnover businesses with high 6-figure or 7-figure profits as well. And kind of what struck me was how many of them didn't feel like they were getting more than compliance to their accountant. So kind of, yes, they were, the tax returns were filed, the accounts were on time and so forth. But beyond that, they felt they were largely on their own. And it was kind of an interesting speaking to a couple of very successful people who don't have management accounts meeting with their accountants because they don't actually know what management accounts are. And therefore, what would be the benefit? Because it's just another set of numbers, and that's not what I want. So I asked them, therefore, what did people want? And what kind of came out quite kind of clearly from a lot of people was having someone by their side, not just at the year end, but month by month. Someone who cared about their profits as much as they did, and regular discussions, regular ideas, and regular strategy. It's going to help give more profits, increase cash, and kind of build a more valuable business. And it's funny, as an accountant, and this is where sometimes the language is a problem. As an accountant, that's what management accounts do, isn't it? But what I realise is quite a lot of the management account meetings we do, we have the management accounts, which are a set of accounts, numbers delivered regularly throughout the year. But quite often we don't actually open them in the meeting because the business we work with might have looked at them, but also what they actually want is somebody on the side to talk about strategy and so on and so forth. And in kind of banging this around a lot, we thought, well, can we kind of change what it means to be an accountant a little bit? And I spent a lot of time over the last few months working with a few business owners, with the team, and also with Nigel at the Entrepreneurs Circle in the kind of group I was there all day yesterday with him, and actually look at what business owners and entrepreneurs really want. And what we kind of came up with very much is what people want is clarity. So they actually need to know exactly where you are and what's next. Confidence, because you have a partner alongside you, not just a service provider in the background, and of course, let's face it, cash. So cash, more money in the bank, better profits, and smarter tax planning. So what we came up with was the to reach my page down thingy. If I'm on the right screen, there you go, it's better. So what we came up with was the concept of a profit partner. And again, in a group like these, we banged around the title a lot, but just to show we're kind of on your side. And we launched this principle, this brand, perhaps at the National Entrepreneurs Convention last week. So you can see us there on the stand. I mean, the stand itself says you don't need an accountant, you need a profit partner, and our t-shirts are that as well, kind of front and back. And the small print on the stand, or let's say small print, just on this says accountancy, but way better because we actually grow your profits. And over on the right there as well, there's, I mean, that wasn't ours, that little booth, and I'm looking a bit miserable, to be honest. Not as dynamic as I'd hoped, of Profitron with a superpower for unstoppable force of growth. We just thought that actually did kind of fit quite nicely. And off the back of that, then we thought, well, let's run a webinar which is partly showing what it's all about, and therefore we thought, well, what could we do that would be useful to people who were there last week or other people, whether current clients or contacts, and thought the idea of running something with 3 ways to grow your profit in 45 minutes would be a nice way of demonstrating what a profit partner is all about. And during the next 45 minutes, therefore, I'm going to show you 3 simple ways to move your profits your cash, how we keep score on that without too much jargon, and how to put together a bit of a 90-day plan. Now, we are recording. You'll get the replay. There is a worksheet, which I believe is in the resources bit, which hopefully you can see. I can't on my screen, but hopefully you've got that you can download and have a look. And why does this matter, I guess, is one of the things. And what we've kind of found is that as businesses go through 500,000 in sales, they kind of hit a point there where growth becomes a bit tricky. A lot of businesses hemorrhage at about 500,000, £600,000 because they found it easy to put the sales on there, but they find actually then they're working harder and harder, they're busier and busier, but for no actual reward. And therefore, we thought, well, let's look at some of the things that actually kind of stop that kind of growth and how we can kind of solve them. So what will you get today? Well, during the next kind of 45 minutes, basically, I'll speak for about 41, 42 minutes perhaps, and then it's kind of Q&A. And if people want to ask questions and answers, I'll be on for as long as you want. So what we get today, firstly, is 3 practical levers you can use this month. You'll get a simple way to see hidden profit. I've put a 1-page action template, but it has actually stretched to, I think, 3 pages now. And also an invitation at the end to a free profit diagnostic review. Now, there's nothing worse than on a webinar when it's 45 minutes and 30 minutes in, they're clearly heading to a sale, and building the value up and up and up of something you might desperately now need because they've sown that seed, or desperately want to have the value built up and then get the discount at the end. So suddenly it's something that's very expensive, seems cheap. I'm going to be very, very clear here. At the end, we'll offer you a diagnostic review, and it is free for people who are on here today. I'll talk at the end who it's most eligible for, but as in, it is absolutely kind of free. So no sale. It's more we just want to demonstrate what we do. And this is something we're actually rolling out to clients over the last few months as well. So starting to live them to kind of, so the idea is every client will have one of these. So what I want to do is just run a quick poll, and I rely on my technical expertise of Meg here to pop the poll up for everybody. And if you want to just say, it'd be just dead useful to know is whether in the next 90 days you'd most like more profit, more cash, or more clarity. We haven't put an option to put all 3. It'd just be useful to us to understand what kind of people are looking for. And I'll just give a second to have a look at the things. Great stuff. Thanks, Megan. I think actually profit and cash are equal. It's just moved. Oh no, they're equal. They're equal again. I can see that the bars moving. Yeah, actually, Philip, yeah, more profit and more cash are dead level on that. So it's just interesting for us to know what people are looking for. I would say it's actually having more clarity helps the other 2, but that's good to understand. So, okay then, so let's have a look then. So why do profits stall when sales grow? Well, what happens is when often a business goes through £500,000 is that it's grown, you're busier, and you start to have to take your eyes off some things. So costs start to creep. You have a lot of subscriptions, you have tools, you might have bought software that was perfect for you as a small business, but as you grow, you need a better version, but you're still paying for the old one as well, or some of your customers are in one and some are in the new ones, you've got duplicates. We find that margins slip. You might have offered discounts that are no longer relevant. Scope, if you're a service provider, you're finding you're delivering services you're not getting paid for, but because the business has grown, you're not quite as on top of it as you used to be, and it's not as clear for you. And rather than cash flowing, the cash doesn't flow, the cash slows. So again, often due to busyness, invoicing might be later, but again, sometimes when you've grown, you might have bigger customers, and sometimes the customers set the payment terms. If you're working for a big PLC or something, they might often tell you that it's 90-day payments, whereas your small customers have been paying on 30 days. So it's slower to get the cash in. And therefore, what I want to look at is some of the drivers, therefore, to combat that. And the first driver is to cut the waste that hurting growth. So looking at those costs and that kind of scope creep. And kind of the way to do this is start with a bit of a 20-minute cost cleanse. So print off your bank statement. It's often good to do this with a pen or a highlighter or what have you. But print off your bank statement or download from Zero, and actually look at what recurring costs do you have. So things that repeat, so subscriptions, payment fees. You might have duplicate tools. We put them into buckets here. Zombie services, things you pay for and no longer receive or need. Now, I would be a liar if I said I'm not guilty of this myself. I'm a sucker for if there's a launch of something that looks like it'd be the greatest thing ever, and it's a subscription price that is only will never be repeated again. I think, well, I'll get it now to secure it and use it later. For some of you last week, actually, you might have filled in. We had a scorecard where you could rate your accountant against a profit partner and to show the difference. And we used some brilliant software, Score App, to do that. Now, I've been subscribing to Score App for 2 years, perhaps even 3 years. And it's the first time I've actually published a scorecard in it. I've drafted a few that never quite went live, but we've been paying for something for nearly 3 years without using it. Now, the intention was always to use it, but it wasn't top of the list. And I thought, I've got it at a cheaper price. It will never be that cheap again. And my subscription price is cheaper than if you buy it online now. But paying for it for 2 years without using it it's going to take a long time to close that differential. So 3 rules in doing this would be: first is only cut what customers won't notice. And by that, if it is a tool that delivers to your customers and is an excellent one. So for us, our biggest single subscription here would be Xero, the accounting software. Clearly, if we cut that, we can't do the job. Similarly, I was at an event last year with somebody with a business turns over about £5 million, actually an accountancy firm. And she was saying she's always been of the opinion she'd rather buy best-in-class software that might be more expensive, because the mistake she made earlier was buy cheaper software that wasn't as good, but also she outgrew, and the time of moving from one to another outweighed the cost saving. So only cut what customers won't notice, but some of the stuff in the background you could look at cutting. Swap, not stop. Often it might be you're paying for the expensive version, and the cheaper one will do. I'll use Score App as an example. We upgraded our subscription 3 or 4 weeks ago because we wanted additional functionality and also the ability to do additional numbers, kind of quantity. But therefore, it's on me, and there is a note in my diary to have a look at the turn of the year of whether we could go back to the more standard version, because that is probably okay for us day in, day out. The other one on swap, not stop would be look at, could you get an annual plan? And particularly, this isn't just about software, but most software and many other things will offer a cheaper payment option if you pay up front. So the standard would be it's you pay 10 months rather than 12, so it's £10 a month or £100 if you pay at the start of the year. And then I've put here as well about appointing a cost captain. That cost captain could be you, but somebody's just going to keep an eye on this and diarise that to do it, whether it's once a month, once a quarter, just have a look at that. And I'm going to suggest a little mini exercise. I don't like having silence on an event like this, but just 15 seconds, just have a little think if there's something you could cancel or downgrade. And I will make it clear that your accountant is not a valid answer. So I'll just give a few seconds on the sheet there. Cool. And I think, what we find is when we look at this, actually, it is, for many customers, I mean, for us, most of our payments are subscriptions. And if you actually do this exercise, it's quite common to cut 2 or 3%, which can be quite a lot of money, because if you're saving, let's say it's £200, £300 a month, that does add up over the year. So it's a simple thing to do, but something we're all, and include myself in this, or historically guilty of doing. It's like the gym subscription at January that you realise in September you're paying for and haven't been. Okay, the second thing we're going to look at is looking at the sales drivers. When I talk about 3 things, so there are 3 headings, but underneath of those, each of those 3 ways to grow the profit, there are a few individual bits. And ultimately, with your sales and increasing the sales will increase your profits on the assumption you've got your margins and costs in control. And there are 3 drivers to sales. The first one of which is the number of customers you have. The second is the average transaction value, i.e. how much they spend each time they buy from you. And the third is the number of times they purchase from you. So as an example, if you were to have 100 customers, each purchase on average is £1,000 and they buy from 10 times during a year, you have £1 million business. Now, as an accountant with a maths degree, I like nice round numbers like that to make it easy for me. But if you can increase them by not a huge amount, so if, for example, you can add 10% onto your number of customers and 10% onto the average transaction value and make them buy 10% more often, 110 customers at £1,100 each, 11 times in a year is a 33% increase to your sales because it compounds up. And I think when we kind of look at this with businesses, it's understanding that compounding and actually that it might be that you know that I'm going to use the number of purchases. It might be you sell something that is a one-off purchase and you can't actually increase that. There might be things we touch on later that you could do, but I use one of our clients actually has a product which has a lifetime guarantee. And as he says, that is a great thing for the initial sale, a bad thing because you don't need it again. Now, sometimes somebody wants two of them, and that's great. But just by playing with two of those, you can have quite a big difference to your sales. So, you know, a 10% and a 10%. Is a use my mathematics there, it's a 21% increase. And one of the things we look at later in the diagnostic is those tweaking a few things by little amount and the big impact it can have. So how do we play with each of those drivers? So let's look at more customers. And the two ways to have more customers in simple terms are to get some new customers or to reactivate some old ones. And how can we do that? And obviously, clearly, there are many, many ways we can do this. I'll just pick two or three for each one. So new customers will clearly doing an ad campaign of some sort. And for many of us these days, that'd be digital, whether that's Google ads, Facebook ads, TikTok ads, LinkedIn ads, etc., but doing some sort of campaign. I will just mention actually to be aware these days and think about, even though there's not a paid advertising campaign on there yet, is a lot of people are searching through ChatGPT these days and looking at ways that therefore we can get ChatGPT to recommend you. And we've had in the last week or so, I think one of the first prospects has got in touch. Where did I hear from you? ChatGPT, but certainly doing some sort of advertising campaign. And I'm going to pick then on, so there's all the digital ones, but I'm going to pick a simple old school one actually, and partly because it cropped up at convention last week. And there was an award ceremony in the evening. Vernon Kay hosted it, and there was an award for the best marketing campaign of the year. And the marketing campaign of the year went to a window cleaner who did a leaflet drop. And I am actually going to, because the detail was sent out an email a couple of days ago. So I'm not going to fully read it, but it's got all the precise figures on my screen there. So basically, the window cleaner in Oxfordshire spent £23,806 on 230,000 leaflets. And they were quite simple. They weren't hugely flash leaflets putting through people's doors. Now, that wasn't to 230,000 different houses. That was over a period of time. And I think the important thing about this is just to remember that, because I'm the kind of person, when I go in, if there's a leaflet there, usually because my daughters are home and have stepped over them, but I pick them up, they go straight in the recycling. But people do look at leaflets. A lot of people do, even if you don't. And this guy realised that. So also over a period of time, 230,000 winter clean leaflets, I say £23,800. The leaflets offered a promo with £25 off or £25 credit. And what that did was it brought in 1,042 new customers. Clearly, they'd chosen where they delivered to, i.e. people with a few windows with a decent spend. So based on the house it's got, it's an average £25 clean. They do it on a 6-week cycle, so broadly 9 cleans a year. And they know that their average customer stays with them 3 years. So each customer they took on will spend an average of £675. Over 1,000 customers, that was over £700,000 of income for that 23,000 spend by using leaflets. Now, for some people, £23,000 sounds initially, and to me too, sounds a lot of money to spend, but it wasn't spent in once. This was over a period of time. So basically, I mean, if it broadly £2,000 a month over a period of time, and the first £2,000 was, of course, it was yielding customers in month one. On average, 1,000 customers a year, about 80, paying £25 every few weeks. So almost the first set then paid for the next month's marketing. So effectively recycled the marketing spend. And that's just a really nice and simple. We all recognize that, perhaps forget some of the simple ones are best. Another one I loved from a couple of years ago, which was for a car garage, a garage like servicing MOTs, and they did leaflets, and they would go every Sunday morning. They had an area, every house was on broadly a 4-week rota, and they went Sunday mornings. Generally, people were in, which meant the car was parked outside, and they had a number of different flyers, and they actually had little almost tool belts built with pockets. And if there was a Vauxhall on your drive, the Vauxhall leaflet went through. If it was a Ford, a BMW. Now they knew that everyone doesn't need a service tomorrow. If they did it once every 4 weeks, it was quite likely the time you need a service, just the right leaflet came through your door. The other one I'll mention in terms of getting new customers would be doing some sort of referral partnership by finding somebody with similar customers to you who you can therefore recommend each other to. Obviously there are referral networking groups like BNI, but by this I'm thinking more of like I'm an accountant. I spend all day every day meeting independent financial advisors who would love to help my clients, and by that obviously sell to my clients, but they recognize the fact I'm talking to business owners, often with profits, who therefore might want to invest or put into a pension. And in talking about, say, tax release on pension, a natural thing is, actually, do you know someone who can help? I know an independent financial advisor. Often do this in kind of almost groups as well. And by that, I mean, as in pairing with a few people who are in a similar category. So weddings would be a great one, a wedding planner in with a bridal boutique, a salon, a photographer, a venue, a DJ, and so on and so forth. And just if you give each other a nice little one sheet or something which says what you do, the benefits of it, that perhaps can give it to their customer, and you just kind of make sure you swap things around. We've got a client who does carpet fitting, and they've spoken to estate agents, because often an estate agent might give a little gift to the new house owner, the new homeowner, might be a hamper or something, and our client is happy to co-fund that gift and have a little brochure in for carpets at the same time. Okay. And then, reactivating past buyers, the Entrepreneur Circle's favorite tool, which they ask all new members to do because it's so simple, but it's so effective, as they call it, 3-line email. The 3-line email is to somebody who's bought from you before, i.e. they know you and what have you, and you've done a good job before. It can be for us sometimes somebody who's done a quote for and has kind of disappeared or what have you. But the 3-line email very simply says, hi, name, are you still interested in whatever you do? If so, let me know, John. So, hi, Dave, still interested in looking for an accountant? Let me know, John. Simple as that, but hugely effective. And I think sometimes we kind of forget the dead simple ones. You might do a win back bundle, somebody who's bought from you before and sent, if it's something you sell is worth a decent amount of cash, you might send them something, a little gift, or as simple as if you're a restaurant cafe, it can be somebody who's not booked for a while, just an email or text to say, haven't seen you for a while, if you come back you'll get a free start, a free drink, or whatever it is you want to offer. Another reactivating one is anniversaries or milestones. And anniversaries, again, could be a restaurant who knows your anniversary, your birthday, or whatever it may be, and has an offer. Or it could be if you sell something that renews, say insurance. If you think in real life, when it comes to your insurance renewal, as well as your current provider, you will get past providers and people who know when your insurance renews getting in touch. The baby photographer, who I know does newborns, is their main business, but clearly they know when they were born, and therefore might get in touch for a first birthday shoot, a second birthday shoot, an 18th birthday shoot, because it's just that little nudge with a little offer to bring people back. Next one I want to look at is higher value, building up, getting people to spend more with you, customers you have to spend more when they buy. And one way of doing that is having a good, better, best, bronze, silver, gold, whatever you deliver, there is a better version. So the simplest would be if we go into a coffee shop or what have you, there's a small, medium, and a large. If we're booking a flight with some like EasyJet, there will be the standard option. We'll have you can just take a little bag on. The next option up has proper carry-on luggage, cabin luggage, and the most expensive might have hold luggage. And for nearly all of us, there is a good, better, best. Whatever you do, there is a better version of it, and whether that's size, its speed, its quality, personalization. And naturally, people often look at the middle one. So people will upgrade. And if you do things around pricing, I think the first step is to actually have a good, better, best. Then you get clever about pricing. So, traditionally people say if you're charging £100 for the standard, £200 for the gold, if you place the middle one at say 170, people naturally drawn to the middle one. If you look online at a lot of things we're selling, they'll even put most popular just above the middle one to pull you to it. But if the middle one's 170, you might think, it's only 30 quid more to upgrade. I think I'll do that to the top one. And there is a lot of money to be had there. The key is to make sure the better and best provide really good value to your customer, but don't necessarily cost you the extra 70 or £100 in my example to provide. So ultimately, if you think of EasyJet, for example, it doesn't actually cost them that much extra to let you do the other stuff, but it's valuable to me because I want to take a big bag, or I want something to hold, or I want priority boarding. The next one is an add-on at checkout. I mean, we've all seen this. The most valuable sentence in the English language is, would you like fries with that? Which made a few $1 billion for McDonald's and became, would you like a meal? And, many kind of checkouts in shops, there are those bits you can add on, whether related or not. And I think if therefore, if you think that in your own business, a restaurant is quite a nice, easy one. If someone orders, would you like a side? Some sort. But again, I'll use my carpet example, or would you like stain guard with that? Or would you like the premium underlay, which ties like the good, better, best, but we're buying the carpet, or would you like the addition? So there's a lot of things you could do there because they're already have made. The biggest step is to buy from you. Once they've psychologically decided to buy from you, buying the extra bit is not such a big step, and therefore that's a really good one to use. And the last I'll use here, which ties in, can be used for in either of those, whether it's part of your better and best or it's the add-on, is priority or speed. People will pay for speed. And whether that is the priority boarding at the airline, it's for quicker delivery, it's the theme park where you pay the priority pass and you don't have to queue. I mean, that's another one we used to do, a presentation I've done a number of times over the years. Used to talk about the $20 million rope, and basically it's when Universal Studios first brought in the priority queuing, and to an extent, and I'm kind of over-egging it slightly, they just put a bit of rope up, and therefore, some nice rope. So, if you paid $50 for the day, you could go that side and not have to queue. And they sold, whatever it was, 1,000 a day. And over the year, the answer was $20 million for just actually having a slightly different queue. But people pay for priority and speed if you offer that as part of your good, better, best, or part of, an add-on. In terms of more purchase, how do you get people to buy more often? Loyalty and rewards are great. We've all got, Tesco Club cards, Costa cards, and so on and so forth, because they know, therefore you keep coming back because you're getting rewards, because you'll get, whether it's vouchers or free coffee or so on and so forth, and they're kind of rewarding loyalty as well. So that is something that can work in kind of so many businesses. If you're a beauty salon, book 4 treatments, get the fifth at half price. A restaurant, if you eat with us so many times, or if you use the Costa example, you get. But if you join our loyalty scheme, it might be based on how many times you eat there, you get something extra, or just because it means you've got their details and know what they like, what to offer them to get them to come back. Also within that, it could be that offering a gift or voucher to one of your current customers who refers somebody else in, which is a very common one. And often it might be that you give the same value to the new customer as well. I mean, Sky for years have, if you refer a customer in, will, they've used different numbers, but for argument's sake, they will knock £100 off your bill and £100 off the new customer. But the main thing there is the first part, and that ties into more customers, but loyalty and rewards get people coming back. And then residual income, turning something into a subscription so you know they're going to keep kind of spending. And historically, this might be used for things like, obviously, lots of things that aren't just subscriptions. But there was an example 10, 15 years ago now that partly because their advert made it really stick out, but probably showed anything could be done as a subscription, was the Dollar Shave Club, who charged I think it was $1 a week was the starting point. Clearly, there were better and best options, but $1 a week, and they send you razors. So if you can sell razors by subscription, you do pretty much anything. I mean, I pay a certain amount of Naked Wines every month, and in fact, it builds up a little bank that then I buy wine as and when they want. But because it's on direct debit, they're getting me money every month, and therefore I want the wine, I'm going to spend it with them rather than go somewhere else. I also get a quarterly box of some of their, recommendations. And if I look at some of the people we work with or know, I mean, I know Beautician offers this, and they effectively offer unlimited treatments for a subscription. Now, of course, they can control that a little bit just by the availability of appointments and so on and so forth, but that works really well because people keep coming back, and they make them feel like VIPs as well. They get a glass of champagne. I know a waxing salon who does it, and as they say, again, there's actually a limit to how many times people actually will use that during a year, but they've got it guaranteed. And another thing, actually, particularly on the things like salons, but I use myself in my hair, is getting people to book an appointment at the end of an appointment. So before they leave, can I book you in for your next one? I basically get my hair cut on a Friday because I don't work Fridays. And if they were to say to me as a left, we book you in for 4 weeks from now, I would say yes. And it's done. What actually happens is I get to a point about 4 weeks down the line, I think I'm getting a little bit bushy now. I'll book myself in, they're not available a few days, and therefore I go every 5 weeks. They could get me in more often by just booking me in before I leave. In putting these in place, though, there are just a few kind of guardrails, I suppose. Is if you're bundling things up, be aware of your margins and make sure they are working for you. Like I said, the good, better, best, it's key. It's hugely valuable to the customer, but it works for you as well. So usually, to use my initial example of £100 for the basic, 70 for the, call it £100 for bronze, £70 for silver, £200 for gold, it doesn't actually cost you an extra £70 or £100 to add it on, but to the customer is worth loads, which is why things like priority can be a really good one. Track your margins and also avoid any sort of default discounting in these. Loyalty rewards, you're happy to offer something, but you need to be aware that it works for you and it's not just a discount for discount's sake. Okay. The third way is looking at margin power and cash speed. That word speed again, or margins we used before. Now, with margins or with profits full stop, one of the quickest ways to grow your profits to increase your price. Now, I actually do a session for the University of Liverpool. I'm actually doing about 3 weeks actually for the psychology department. They have an entrepreneurial module they all do on, and I do a full session on pricing, and I will actually probably deliver that as one of these events in the future actually, because it's very good, even if I say so myself. But the point is I've done it a number of times. They keep asking me back to do it. And like I said, one of the quickest ways to increase profits is increase prices, and there's a lot to that, and hence I'll do a separate session. But it's simplest. A lot of us don't like to increase our price. We feel awkward about it. But if you were delivering a good product or a good service, you are far more sensitive to that increase than your customers are. Now, I'm not necessarily saying take the mick, although there is the old adage, isn't there, that double my prices, I'll lose half the customers. Well, there's nothing wrong with that. You're getting the same money in for doing less work. But in reality, I'm not talking about extreme. I'm looking at a few percent. And it's all straight to your bottom line. There's no additional cost. You've just put your price up. Now, often it makes sense to test it. And if you're feeling uncomfortable, fix it on, do it on some of your low margin products or services that you're not making much money on anyway. So if putting the price up on those meant nobody bought them, you've not really lost anything. But what will probably happen is some of those low margin products or services will become a reasonable margin or even a good margin and worth doing. So I would definitely look at that. And if you can't put the price up on some of the low margin lines, kill them, as it says there. The next one, in particular for services, to standardize your scope to stop giving stuff away. If you go into a restaurant and you order your main, they bring it to the table. You don't say, oh, actually, you could have a side for free. Whereas in service businesses, that often happens. And often in reality, the client isn't actually thinking like that in their mind. So actually, can you do that or can you answer this? But it's not in the scope. And as you grow, often you find the scopes have varied a lot and it's hard to remember who's paying for what. And therefore, having quite standard scopes is a good way to stop giving stuff away and losing money. And then speed. And speed of cash. As I said earlier, often as you grow, the cash slows. So I do a session on this for both University of Liverpool's entrepreneurial module and John Moore's. So I've delivered this 15 or 20 times over the last 3 years, a full session on cash flow. So that is also an upcoming live event I will do. But just to pick a few bits out of it, is to invoice on the order rather than to wait for delivery, bring stuff forward. Or on a milestone, if it's a project, rather I'll invoice all at the end. Well, actually, when we hit certain milestones, can we invoice and get some money in? Use cards, as in credit card or direct debit by default. And by that either gets the money up front or puts the power in your hands. Now, they do come at a slight cost, but it avoids invoicing, then waiting for the customer to pay, who may or may not pay on time, and so on and so forth. So card and direct debit are hugely useful in terms of speeding up the cash. If you have larger jobs, get a deposit. You might have early payment discounts, so it's £100, but if you pay up front, it's £95. Ties in to what I said earlier about some software subscriptions where you can take advantage of that yourself by paying up front. And the other one is I'm British and therefore I don't like talking about cash to people and don't like asking people for money. But ultimately, we're also in business. And if you've delivered a product or service, you deserve to get paid and should not feel bad about asking your customer or client to pay you. Now, if you do feel awkward, one of the best ways to get someone else to do it for you. And particularly actually if you are delivering a service where you don't want the payment thing to get in the way of you trying to build a relationship and deliver a service. If you don't have anybody else, you can make someone up. In the early days of this firm, I didn't have somebody to chase debts and so on and so forth. Our invoices came from billing at Jon Davies Accountants, so I made up Belinda Billing. I didn't put a surname on anything, but we had had lovely little discussions with Belinda. It was all me. But then as we grow, I've got somebody doing it for me. The other thing as well is to have most of the accounting softwares will have that you can activate an automatic chasing thing. So to chase, the day the invoice is due, 3 days later, 7 days later, 14 days later, with templates to mean it's happening automatically and systematically. Secondly, it takes away some of the awkwardness of you feeling you need to do it. Okay. So bringing it together, what we look at, and this ties into the diagnostic, is the 7 key numbers in a business. And the first 5 are inputs, the last 2 are outputs. But you'll obviously recognize some of these from what we've talked about on this session. So first, sales momentum, i.e., what's your revenue and how quick is it growing? Second is looking at your margins, your gross profit margin, the margin on everything you deliver. Operating efficiency is looking at overheads. So we talked about subscriptions, the likes earlier. Team productivity we haven't touched on today, but that's looking at how productive the team is. But by that, what we measure is your revenue per employee. So if you are a £1 million turnover business with 10 employees, you have £100,000 per employee. And therefore, could that be better? And by that, we're looking at 2 ways, as in if you grow to 1.1 million, can you still deliver it with 10 people? So the average is 110,000, and looking at therefore ways to be more efficient. Cash speed is that thing of how quick you can turn cash around. Then the outputs are such a how much cash, what cash buffer you have in the bank, and is it enough to cover? And we generally look at covering all of your tax payments, at least 2 months overheads, and having that in the bank as a buffer. I have a client who, during COVID, serviced or the travel industry, and every week we would calculate cash day, as they called it. If we don't make another sale, when do we run out? And number 7 is business return. And what we do is we track these on a growth scorecard with kind of red, amber, and green. And what that means is, like I say, the profit diagnostic review, which is, I say again, upfront, is available. Anyone on this call is we're happy if you book one of these, and there'll be a code in as a QR code, and we'll send you a link. What's it all about? So what we do is we benchmark you against similar firms. We have access to the figures of tens of thousands of businesses, and we can take you and the sector you are in according to Companies House. You said what you do, and benchmark against other people in your sector using those numbers we've spoken about. And we can show where you kind of fit on a scale. We can show a bit more detail. That's kind of the graphical thing. And it's interesting because what it does is it sometimes open your eyes, because we're all guilty of thinking, oh, but people can't do that in my sector, when actually they can. We had a restaurant quite recently who we just looked at their revenue per employee, because we felt there were probably too many people on, particularly in quiet times, and saw that they were quite low on that revenue per employee compared to other restaurants. So we could go quite niche as well by Companies House code. We then look at the 7 key numbers, and a bit like those 3 sales drivers, we just tweak them. We have a slider, and it goes quite a long way down the page if I showed the whole thing. But this top bit shows a slider where we can just change all the numbers by 10%. And in this instance, it shows that would make an extra £213,800 of profit. But also we can do them individually, because it might be, say, actually revenue, 10%, that's easy. I want 20%. But you know what, margin, that is what it is. So we'll do them individually with you and show you, therefore, what impact that would have. And off the back of that, look at 3 actions and a plan of what you could do to kind of meet those. And as I said, we do normally charge for this. We're now kind of baking it into our service for all of our clients. But for anyone on here today, we will actually happily do one for free. If you just actually mention who it's kind of generally aimed for, generally owned managed businesses with £500,000 turnover and above. Now, we'll happily do it for you if you're smaller than that. And we've done it. I did one, and I'm now working with clients to hit these targets. We turned about £380,000 the other week. And their expected profit increase based on the sliders was 102,500. But we do think over on the right, it works. It's probably more relevant for people with a couple of team members and so on and so forth. Clearly, it works for a one-person consultancy business, but if you're a one-person consultancy business doing, let's say, £100,000, and your expenses are a mobile phone and a bit of travel, there's not so many things to tweak. But that doesn't mean we're not happy to have the chat about, particularly on the sales side. But what it's really aimed at is ambitious owners who want proactive support. And this QR code will take to a link if you would like to book one of those over the next few weeks. I will just actually know we've got a couple of clients on here who, in the background, we're actually looking at scheduling with you. If you'd like to schedule, please do. But I say, if that is the case, drop us an email, because it'd be best to do it with your client manager, whereas this will actually automatically just assign it across the team as appropriate. But like I said, that QR code will stay in the corner, and we will send it to you afterwards. So I'm just going to ask if there are any questions, because in terms of my content, I'm done on the content. So I'm going to ask if there are any questions. And actually, while Meg is actually sitting next to me with the questions, I will just do a quick reminder of the 3 ways. So the first one is to cleanse the costs, second is to increase sales, and the third is to look at margins and cash. Like I said, I'll leave that QR code, and Meg is, like I say, due to my technical inability, she's handed me a couple of things. So somebody's asked about the diagnostic review. How is it different from a normal meeting with the accountant? It's a good question. basically, and actually, they've also had what to have to give you in advance. Yeah, obviously, clearly, we'd need your numbers in advance. So we just ask for, we don't need access to your zero or whatever, anything like that, because it feels like a bit of too much of a commitment. But if you give us 2 years worth of statutory accounts, which therefore gives us 3 years of figures, that allows us to do that. We've got somebody who is a beauty salon, asking for some things for them. Well, I guess, beauty salon. I think I did touch on a salon earlier in terms of the so the beauty salon. I think the one we work with is actually a couple of things actually. So I guess in terms of bringing in new people in, often beauty salons and the likes when you're doing B2C, I mean, on the social media and adverts, Facebook, Instagram, and TikTok are a better place than I might look at LinkedIn. So perhaps running an ad on Instagram or Facebook, you can do those obviously on location, on age, and gender, etc., etc. If you want. Google reviews. Somebody I know with a very successful salon on the Wirral did a big piece about reviews. They really want loads of Google reviews. So basically, everyone who came in was asked in a nice way. They had I think they put a QR code actually on the reception as well, but made a big thing of getting reviews, which then obviously drove new people to them. It is possible. I think I mentioned earlier about the subscription model in a salon. I know a guy down in the Milton Keynes area who used to be in a kind of mastermind group with. He brought that in, was the first I knew. Well, the first person I knew who successfully did it, and as he said, it worked really well. Because actually a lot of the money you make is actually on the salons as people kind of leave. And I'll probably go back to what I said about the barber, but it works as a salon, the book the next appointment from an appointment. I'm just looking across at Meg. Yeah, cool. I think actually there's a couple. What I'll do is actually on the diagnostic review, this could be asking a bit about that. So yeah, actually, if you there's one actually, do we need to move our accounts you to the review? No, you don't. And like I said, that's what we say, don't give us access to zero. You can give us 2 sets of accounts, and that gives us enough to do that with you. And the idea is there's a little report and a meeting. Clearly, let's face it, we're doing it because we hope we'll impress you. And you might think about moving your accounts to us, but that is it's not a commitment. It's more a way of just us giving something to you and showing you that. And I think on that then, I think we're about done because I think a couple of questions are quite similar, which I've probably covered actually, looking over there. So I hope that was useful for you. Like I say, just to recap, there's 3 ways to increase your profits: cleanse the costs, look at those subscriptions and the likes that stack up, sometimes unused. Increasing sales, when I see it on this slide, it's like the simplest thing ever, isn't it? But what they pay the big bucks for. But hopefully, we give some ideas of things you can do to increase sales, but then be very aware of the margins and cash. And on that, I'm going to say thank you very much. We'll send the recording out afterwards. We'll send you a link for the diagnostic. And thank you. And I'll see you soon.